Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also subscribe to our channel and click on the bell button to receive important financial updates at the earliest. Now today we bring to you information on Mr. Radhakishan Damani's stock portfolio for the year 2018. Now on purpose we have kept out two stocks, which are DMart, where he is a promoter, and Jubilant Foodworks, where this stock keeps appearing in and out of his portfolio. Also friends, if you think that this content is beneficial, please don't forget to share this video because it could also benefit other people who may watch it. Please watch this video to know more. The first stock on the list is Advani Hotels and Resorts India Limited, which is available at 57.75. The symbol for this company is ADVANIHOTR. Now, Advani Hotels and Resorts India Limited is engaged in the hotel business. The company is engaged in short-term accommodation activities and restaurant and mobile food service activities. Now, if you were to look at the one-year chart, you would see that the stock is closing the year almost at the same level at which it started it. The market cap of the company is 266.92 crores, which means that the company is a small cap one. The EPS is 1.83, translating into a price to earnings ratio of 31.56, which is much below the industry PE of 63.71. The book value is 9.34, translating into a price to book ratio of 6.18. The dividend yield provided by the company is 1.04, whereas the promoter holding here is average at 50.17. The 52-week high for the company stands at 87, whereas the 52-week low for the company is 51. The second company on the list is VST Industries Limited, which is available at 2968.70, and the symbol for it is VSTIND. Now, VST Industries Limited is an India-based company which is engaged in the manufacturing of cigarettes containing tobacco and unmanufactured tobacco. The company operates through tobacco and other related products segment. The company's geographical segments includes within India and also outside India. The company also has a manufacturing facility at Hyderabad in Telangana. Now, the one-year chart reveals that this company has also not done wonders. It's not been on a consistent uptrend and has literally been an underperformer. The market cap of the company is 4584.24 crores, which means that the company is a mid-cap one. The EPS is 115.70, translating into a price to earnings ratio of 25.66. Now, this is below the industry PE of 30.85. The book value for this company is 346.08, which translates into a price to book ratio of 8.58. The dividend yield here is decent at 2.53%, whereas the promoter holding is low at 32.16. The 52-week high for the company stands at 3875, whereas the 52-week low is 2591. Now friends, this company has a lot of history with respect to Mr. Damani trying to take ownership control of the stock many years ago. However, that attempt failed. Now the third company on the list is TV Today Network Limited, and the price for this stock is 450.55. The symbol for it is TVTODAY. Now TV Today Network Limited is a holding company. The company is engaged in television programming and broadcasting activities. The company operates in various markets such as television, digital media and radio. The company operates various news channels such as Aaj Tak, India Today Television, Delhi Aaj Tak and Taste TV. TV Today Network Business Limited and Mail Today Newspapers Private Limited are the subsidiaries of this company. Now, if you were to look at the one-year chart, you would see that for the first 6 months of the year, the company was on a consolidation mode, but since then it has been on a huge uptrend. The market cap of the company is 2687.69 crores, which means that the company is a mid-cap one. The EPS is 20.34, translating into a price to earnings ratio of 22.15, which is much below the industry PE of 45.85. The book value is 104.88, translating into a price to book ratio of 4.30. The dividend yield is 0.44, whereas the promoter holding here is average and 57.42. The 52-week high for the company is 510.35, whereas the 52-week low is 210. Now, this company is also a favorite stock of Ramesh Damani. The next company on the list is the India Cements Limited, which is available at 145.15, and the symbol for it is INDIACEM. Now, the India Cements Limited is a cement company. The company's brands include Sankar Superpower, Coromandel King, and Rasi Gold, and these are also available under sub-brands such as Shankar Shakti and Coromandel Superpower. Now, the one-year chart reveals that this company has really not done anything and has been an underperformer while closing the year at a lower level than what it started at. The market cap is 4472.83 crores, which means that the company is a mid-cap one. The EPS is 3.23, translating into a price to earnings ratio of 44.94, which is a bit more expensive compared to the industry PE of 39.14. The book value of the company is 165.82, which translates into a price to book ratio of 0.88. The dividend yield provided by the company is 0.69, whereas the promoter holding is low at 28.37. The 52-week high for the company is 226.25, whereas the 52-week low is 141.50. The next company on the list is Blue Dart Express Limited, which is available at 4229.10, and the symbol for the company is BLUEDART. Now, Blue Dart Express Limited is engaged in the business of integrated air and ground transportation and distribution of time-sensitive packages to various destinations, primarily within India. The company provides courier and express services. Now, the one-year chart reveals that this company has been an underperformer and nothing much has happened during the entire year in this particular stock. The market cap of the company is 10,034.78 crores, which means that the company is a mid-cap one. The EPS is 55.84, translating into a price to earnings ratio of 75.74. Now, this is a little more expensive compared to the industry PE of 65.92. The book value is 219.86, which translates into a price to book ratio of 19.24, which again is very expensive. The dividend yield provided to the company is 0.35, whereas the promoter holding is very good at 75%. The 52-week high for the company is 5300, whereas the 52-week low is 3830. Now, the next company on the list is Sundaram Finance Limited, which is available at 1663.20, and the symbol for it is SUNDARMFIN. Now, Sundaram Finance Limited is engaged in financial and insurance activities. The company's segments include asset financing, insurance, and other operations. The company provides finance for purchase of commercial vehicles, cars, multi-utility vehicles, construction equipment, tractors, and working capital finance. The company is engaged in the distribution of a range of financial products such as mutual fund, deposits, and insurance, among others. Now, the one-year chart would reveal that this company went on a slow uptrend for the major part of the year, but of late in the recent market correction, this company has also underperformed very severely. The market cap is 18,481.79 crores, which means that the company is a mid-cap one. The EPS is 48.83, translating into a price to earnings ratio of 34.06, which is much below the industry PE of 42.79. The book value is 337.08, which again means that this company is available at a price to book ratio of 4.93. The dividend yield is 0.69, whereas the promoter holding percent is 35.95. The 52-week high for the company is 2100.05, whereas the 52-week low for the company is 1450. Now, the penultimate company on the list is 3M India Limited, which is available at 20253.10. The symbol for it is 3M India, and the 3M India Limited is a technology company, and by the one-year chart you can see that this stock has been on a consistent uptrend and a lot of wealth has been created here. The market cap of the company is 22,815.26 crores, which means that the company is a large cap one. The EPS is 273.30, translating into a price to earnings ratio of 74.11. Now, this is much more expensive compared to the industry PE of 22.51. The book value is 1088.67, which again translates into a very expensive price to book ratio of 18.60. The company did not pay out any dividends and the promoter holding is strong at 75%. The 52-week high for the company is 22,709.30, whereas the 52-week low is 10725.05. Now, the final company on the list is TV18 Broadcast Limited, formerly IBN18 Broadcast Limited, and this is engaged in television broadcasting networks. The company operates news channels such as CNBC TV18, CNBC Awaz, CNBC Bazaar, CNBC TV18, Prime HD, CNN News 18, News 18, IBN7 and IBN7 Lokmat. Now the 1 year chart reveals that this company was on a consolidation towards the middle of the year, but of late there has been some sort of an uptrend. In the recent market correction it corrected, but again there has been some upward movement. The market cap of the company is 10,766.18 crores, which means that the company is a mid cap one. The EPS is 0.70, translating into a price to earnings ratio of 89.71, which is very expensive. This is also very expensive compared to the industry PE of 45.85. The book value is 21.57, which translates into a price to book ratio of 2.91. The dividend yield is not applicable here as the company does not pay out any dividends, and the promoter holding is better than average at 60.40. The 52-week high for the company stands at 66.75, whereas the 52-week low for the company is 33.05. Now friends, please don't treat any of these as stock recommendations. Please go ahead and do your own research. And also, if you are benefited by the content of this channel, please don't forget to share this video because it could also help some other people who may watch it. Also friends, if you have still not subscribed to this channel, please do so because we bring to you regular videos which could help you in improving your net worth. Thanks for watching, and we will see you soon with another video.